Welcome back to a new podcast of mine. So, the Fed's meeting where they would decide to increase rates or not, it's less than a week away. And I wanted to talk to you about the situation, not only in the US, but also in Europe before this happens next week. So, my patrons that are from the US and are invested in the US markets in US dollars are waiting patiently for next week of what to do. And I posted on my blog three possible scenarios, and what to do in each scenario of the Fed's decision. So basically, we've been selling out of our stocks and ETFs in favor for commodity futures. And I talked about in detail why commodity futures and why you want to own the real thing or be in commodity futures instead of remaining in the markets in case the Federal Reserve increases rates and, most importantly, starts selling assets off their balance sheet, which would crash the markets. The Federal Reserve and other central banks like the ECB are talking about shrinking the balance sheet for quite a while now, but they never actually do it. My fear is that this time is different, and they actually want to fight inflation by shrinking the balance sheet and selling off assets from that balance sheet. So increased interest rates of 0.25 or 0.5 are not going to affect the markets by much and are mostly priced in. However, shrinking the balance sheet would probably crash the markets. So to explain this in basic economic terms, if supply is constant and the Fed buys assets and increases demand, prices will go up. If demand is constant and the Fed sells assets, it will increase supply and prices will go down. So imagine quantitative easing, buying assets in form of debt, right? Which stimulates the economy, increases demand, but now the reverse of that. So it would have the reverse effect and deleverage the markets. That way, the Federal Reserve or our government can bring inflation under control without actually raising interest rates. Because if they did raise interest rates effectively above the inflation rate to fight inflation, that would bankrupt the government. So in case that happens, I sold out of my stocks in favor for commodity futures and remained in commodity futures. Usually, commodity futures or commodities in general are a really bad investment. If you look at a historic chart, for the last 50 years, they performed horribly. But there's a very specific time and place in the markets or in the economy where commodities are skyrocketing, and that is during stagflation. We're not only in a stagflation, we are in a stagflationary recession, or just before of the stagflationary recession. So the European Central Bank seems like that they made a decision already regarding rate hikes and fighting inflation. And their decision is to go back into stimulus. And they're going to continue by stimulating the economy because now they have something to blame, which is the Ukrainian war and Russia invading Ukraine for the inflation that is happening right now. And since they are following a Keynesian economic pattern, if we are in a recession, which we are, our productivity is down, unemployment is going up, the markets are kind of deleveraging, we are in the bear market in the NASDAQ at least. So their answer or what to do during a recession would be to stimulate the economy further, which will cause more inflation. So unlike my American friends who have to still wait for the Fed's decision next week, which will also influence European markets, the European Central Bank made a decision to go back into stimulus and not shrink the balance sheet. And I believe that the Federal Reserve will follow suit and do the exact same thing. So what does that mean for you as an investor? What that basically means for my European friends is that they can rotate out slowly of commodity futures into commodity stocks again. But I would do it cautiously because whatever the Fed decides to do, whatever the US decides to do, affects the European markets as well. So only if you're from Europe, you can slowly rotate back into commodity stocks out of commodity futures. I want to touch base on one last thing, and that is regarding the collapse of the American dollar and the collapse of the American dollar as a world currency. There's a war going on right now, an economic war against Russia. If you haven't noticed already, the West needs Asian commodities. In the case of Europe, Europe is dependent on Russian oil and gas for their energy consumption. China produces the stuff the West needs. Russia produces the energy that Europe and the West needs. And pretty much there's all these countries in Asia that are productive and supplying the West in favor of paper money. So by sanctioning Russia and threatening to also sanction China and all these other countries, the sanctioning in the first place is only possible because of the US as a world currency. It's their power. They can bully smaller countries or other countries and sanction them. But the reality is that the West needs Asia and Asian commodities. We need their stuff. We need their production and their productivity. And by sanctioning the countries you rely on and threatening other countries with sanctions that you rely on, they don't rely on you, you rely on them producing, just moves Asia and these countries that are producing away from the West. Obviously, I'm not justifying Russia's actions by invading a smaller, helpless country like Ukraine, but it is difficult to talk about economics and world economics without talking about geopolitics. And what I'm trying to say is that the trillions and trillions of dollars the US has printed and is not going into hyperinflation as a country is only the sole reason for that is because of the world currency status of the dollar. So let's have a look. Saudi Arabia, China, Russia are already trading oil in euros and other currencies. And because of the actions of the West, not only by the sanctions towards Russia, but freezing the treasuries. So you have to understand China, Russia, all these countries, Japan are holding large amounts of US cash in form of treasuries. That's like the security. So if you freeze a treasury, if you freeze the security of a country, what good is that security? What good do your securities, your treasuries have as a country if the West can just decide to freeze it and you have no access to it? It's like not having a security at all. And this is causing that Asia, China, Russia, Saudi Arabia, India, they're cooking up an alternative system right now to SWIFT, to using the US dollar. And whatever the alternative is, it is probably something backed by gold and resources like oil. But whatever that is, they have no reason left to keep their treasuries or to keep trading in US dollars. If you look at smaller countries that are printing trillions of dollars like Turkey, the inflation has to be absorbed by the Turkish people because the Turkish lira is not being exported or not exported enough to other countries. This is not the case for the US. The US can export its currency because it has world currency status. But now imagine everyone dumping their world currency, their treasuries in US dollars all at once in favor for an alternative system. Now they're exporting or importing back all the US dollars back into the US. And there you go. We will have hyperinflation. I don't know when, I don't know exactly how, but all I know is that we are a step closer to the devaluation of the dollar and the end of the dollar as world currency. And it's going to be a horrible, horrible recession. The worst recession anyone alive has ever experienced. And if you see gold going up in the past few weeks, while the dollar is actually going up in value at the same time, imagine what would happen to gold and other precious metals like silver if the dollar completely devalues. In Russia and China, they're playing chess. They're playing 3-4 moves ahead, and they're buying all the gold. They're preparing for something, and they're buying all the gold, while all we have is paper. On my blog, I post 5 times a week, and I write a market update, which you can get directly to your email. Today, for example, since I have an influx of more people joining my blog, I went over sector rotation again and explained the entire concept in detail for all the newcomers. If you're interested in, please check it out. Click the link in my bio. I added in the description of this video. Have a look. Maybe you like it, and I hope I can help you too, just like all the other people that I have been helping all this time. Thank you very much, and thank you for listening.